Let's welcome in our next guest on the show. We have Samir Arora of Helios joining in. Samir, great to have you on. Long time, haven't spoken to you. Hello. I like the frames, new frames, I think. So wonderful.
I've been roaming around India and the world, so yeah.
Oh, okay. A new perspective, with looking at things with a new set of eyes, as they say, right? But I don't know. Are you finding anything new? I mean, we'll talk about Trump and tariffs and all that rhetoric in a bit. But let's talk earnings first, because I've been looking at a lot of notes in the last 24 hours. And the general sense when you read these sell-side notes is, itna bhi kharab nahi hai, Q1. But you tell us, what's your assessment?
Actually, the thing is that if you keep looking at the old companies, then kafi kharab hai. But there are so many interesting companies, and you know the ones we own, all of them had massive results, like massive growth at least. And in an environment where growth is very limited otherwise, you need at least 10-15% of your portfolio, maybe even 20% in 5-6 stocks, which are, you are looking forward every day to what they will do in 2 years and 3 years, instead of saying that, some company has guided for 1 to 3%. Now it is making it 2 to 3%. That kind of boring things you can handle only up to a point. So actually, if you look at the entire menu of choices, there were many companies that have done well, but in aggregate, it is nothing great. But it's not bad. It's like 9-10% type of, aggregate earnings growth, which is okay for now, if it is as long as it's for 1 or 2 quarters only.
So where does that leave the market then? I mean, again, I'm just leaving aside the whole tariff issue, but with these kind of earnings and the cuts so far for full year are just about 1%. Most brokerages have cut by 1.2, not more than that. So where does that leave us in terms of market valuation? Any upsides or no?
So the upside isn't that you'll get 10%. If you see the big pools of earnings, so IT is growing maybe 3-5%. Large consumer is excited if they grow 5%. And the large banks are growing 8-10%. And after 1 or 2 quarters, they may grow 12-14%. So as of now, the aggregate earnings growth is 9-10%. Therefore, it would be reasonable to think that over the next 2-3 quarters, or at least till the end of the year, you're only supposed to make another 5-6%, which is 1% per month kind of return will be great. I mean, it won't come every month. What I mean is, you can't say today that we are in an environment of 20% growth, market appreciation. But hopefully next year, by the time interest rates come through and there is some government action on something to do with consumer, a little bit more, and in any case, because of monsoon or because of interest rates feeding through, the consumer sector also does better. Otherwise, we are looking for our consumer stocks which grow very high, but the aggregate numbers, of course, for India are quite limited.
Samir, hi, Reema here. So you're in India right now?
No, I was. Now
you were in India. Okay. So I'm guessing you must have spent a lot of time on ground. You must have met companies, investors. I mean, what were your big takeaways, and what is the shift in the sentiment or tone compared to your last India visit?
By the way, I come every month, so that is not a big deal for me in that sense.
Right.
But
then the first part of the question.
The way I present it to people and to clients, distributors, and even internationally is that you will make very below average return, like 10-12% or 10%, but it has to be compared with alternative, which is the interest rate. So if the government bond is giving only 6 point some percent, which say 9-10 years ago was giving 9%, so you are supposed to make a spread of 5-6% kind of range. So don't look at it in absolute that, oh my God, previously the market used to grow, earnings used to grow 14-15%, but now only 10-12%. Also for now, because the inflation is low, the nominal growth is low. And to the foreign investor, we say that you were broadly making at the market level, we used to outperform, but and still do hopefully. But at the market level, you are making 14% type and losing 3-4% on currency. Now you may make 11-12% and hopefully not lose much on currency. So in the end, everybody's happy and they move on by focusing also on the alternative and not just looking at the nominal number, which is lower than we have seen in the past.
Hi, Samir. Good morning. Good to see you. When I thought Surabhi will ask you about Trump, because he's been making a lot of noise. You'll just completely ignore it. Yesterday, I think what was trending since the cricket game as well as Trump were trending, People are talking about whether or not he made a couple of calls to the bowlers and said, I got it done. Thank you so much for your attention, But that was on a lighter note. But what do you make of Trump's commentary?
So the first thing is that, in some macro sense, somewhere there is some angle. It might be geopolitics angle, which might lead to some problem or something, that who's your friend, who's your enemy, are you in this camp, that camp. But from an economy point of view, because the exports to US are so low, and particularly from the stock market, other than these two textile companies or one which, we also own Gokuldas and all. Okay, these guys will follow what to do. But broadly, we won't even know exactly which stock to feel negative on from this angle. But look at the positive, that today one of our other companies, Paytm, has sold some 4,000 crores of stock led by two American banks, Goldman and Citi, which I assume broadly means that the investors will also largely be foreign and maybe American. So today, if we find, I hope we do, that the number of investors or a large thing was bought by US investors, that would be like a positive thing to say, that even practically nobody is overly reacting to that. Either assuming that this is limited because of our economy and the weight of exports or share of exports, or that this is not going to stay for long.
Samir, this morning in your typical style, you have tweeted on IndusInd Bank, Bajaj Finance and PNB Housing Finance. Now, where Mr. Anup Saha joins PNB Housing or not, that time will tell. But do you think the
stock?
Yeah, that's what I want to ask you. Do you think the stock has overreacted to Mr. Girish Kaushik moving on? Is it providing a good entry opportunity, because it's lost 20%, in a matter of 3 sessions, I think?
Well, people say we are not supposed to talk about stocks, but broadly we know that no CEO is worth that much. But, if it turns out that he's joining the private equity guys who sold the stock, that would be hugely negative, and I would also be very angry with those private equity guys. But if it turns out he's left for another job, now what can you do? But if in all these cases where you find that the management is good, but on their leaving, if the stocks fall 20%, then you have to take a new view that the management is not good, that they did not hand over that company fairly and squarely to the management. They did not deal with succession planning, or they made it more volatile by leaving, because your responsibility does not end on the day you just leave suddenly, particularly if you leave suddenly. So, but anyway, as of now, 20% looks a bit too much, I agree.
But, forget about the stock for a second, Samir. I have to thank you. I thanked you online as well. Thank you for the humor. I just could not stop laughing after reading that tweet. No one puts it like you do.
Which one?
The same tweet, the same post we're talking about, yeah.
So many tweets, I don't know.
That's also true. That's also true. No, but we're talking about the one that's on our screen, talking about these big ticket management changes at large financial organizations. Let's see. So we have the answer on IndusInd now. We have to wait by and see the answer on PNB Housing. But on IndusInd, and larger question on banks, Samir, one, we have the policy coming up. So, you tell us on financials if you're changing anything, retaining your stance. And specifically, do you think that this is going to be a case of buying a turnaround story? People love to buy turnaround stories in this market. Problem is, half the time those stories don't work out. So what do you think?
We also buy many turnaround stories, from Paytm to Zomato to delivery to whatever, to fintech also. But this one I am not buying right now, because, we have seen when there are these legal cases, one is just a results and growth, and one day they're becoming earnings and all that. But here there are, you've seen how cases come up 1 year later and 6 months later. And this is a bit more complicated. Plus in financials and in banks, we already have our exposure. Plus these things don't grow that highly, that at that higher rate that you think that you are fascinated by the fact that something in the economy, or not economy, but in habits of people is changing. So this is like a regular this thing. So I am not buying that.
So you're circumspect, and I completely understand where that comes from. This is exactly what we were discussing with Abhizir Divanji just a while back, that from this forensic audit to MCA to RBI to SEBI, there are too many pending inquiries.
And they drag for years, or 1 year, 6 months, whatever. Plus, in this, we have enough exposure in this sector, so we don't need to try.
Got Got that point. Just to go back to the Trump issue that Nigel highlighted, I want to get your overall sense on this. Till now, when we were talking about why FPI flows are not coming, so first they were not coming because the US market was doing too well. Then they were not coming because India earnings are maybe pedestrian, some will argue. Then they were going to South Korea. Is this going to become another reason if there is this, cold tonality between India and US? Will it make foreign investors more nervous?
By the way, the foreign flows are coming from Feb 1. If you see in aggregate from February 1, the flows are positive. This month, they were negative for two reasons, I think. One was the Trump tweets or whatever. And second was the results did disappoint a few people if you looked at them individually. But otherwise, because of the big picture thesis of the entire world and also mine, that the world is diversifying away from US in terms of their equity exposure. Currently, the MSCI world, the US weight is very high, maybe some 68, 70%. And everybody seems to be feeling that although US as market is doing well, but for different reasons, maybe because of currency, because of otherwise, the world is looking at non-US also. One reason may be that for the first time in many years, the MSCI world ex-US is beating the US market in pure performance. You can see that in the nervousness about dollar and the appreciation of gold and these books like Ray Dalio's book on how countries go broke, that there is some nervousness, maybe there is anger, maybe there is frustration towards US. So there is some X%, small bit, large bit, some move away from US, which for the rest of the world then becomes proportionately very high. Means if 3-4% leave US out of 70 or whatever, that for the 30% weight is a 10% increase. So in that, India has a story. You can be 1 day behind, 1 month behind. If China gets more than 1 day, you will get because you are part of that emerging market. But even otherwise, if you call primary plus secondary together, India is getting flows since Feb. The real selling happened in September 24 and in Jan 25, which was together in 2 months, something like 22 billion. But after that, it's not been in your face selling.
Got that. So Samir, one sector in India which you think is overhyped, and one sector where you think perhaps consensus may be getting it wrong and it could be a little under-owned, undervalued.
So overhyped, I've always said these new businesses are normally overhyped. I have read many books on this, particularly the solar theme. They might be great for India. We need it for climate, but for investment, these things never work. And even IT is still overhyped. Even today, people say that the valuations have reached long-term average. If you have reached long-term average, that means there were periods when it was below average. And what were those periods and why today should be a period which should be below average considering the uncertainty in US, the fact that companies are themselves admitting there is firing, that companies are not in aggregate hiring people while in the same city, some GCCs are hiring in massive numbers. There is a disruption going on. But because we have in the past seen great returns, nobody's willing to give up so easily. So that hope has to be, I think, brought down a little. In terms of another one, I think overhyped is the stock market related stocks, which is the exchanges, the depositories, the brokers, because we know that the government intent is to bring it down. We know that people have lost money. So beyond a point, we see that in the participation in the accounts of all these guys who come up every day and disclose how many active accounts, everything is falling. And we know broadly that if people lose money, then sometime or the other, they will drop out of this. And this has happened in Korea in the past where there was some frantic this thing in the olden days and then suddenly it disappeared one by one. And in a few years, you became a normal this thing. It's also a macroeconomic issue. I saw the interview of, Ashish Gupta of Axis with Lata saying that it is more than a stock market issue. It's a macroeconomic issue. I believe he was saying that it is 5-6% of India's savings that the F&O traders are losing every year, which is a big number. And most of it is going abroad. So that makes it even worse. By the way, it neutralizes the entire tax cut that was given by in the budget, which was, say, 1 lakh crore. Broadly, the public has lost 1 lakh crore. And not only they have lost, if they had given it to some other Indian or to me, I would have spent it in India. They have given it to guys who have taken it out of the country, story over. So now they want another tax cut or a GST cut so that they can give it to Dream 11 or give it to F&O. What is it is not a stock market issue. It's a macroeconomic issue. And it, one way or the other, has to be brought down.
Okay, and just one more, the other part of the question. Any sector which, according to you, is grossly undervalued in India?
I don't know about grossly undervalued.
Little undervalued.
But the thing is, people are more cynical about the new age companies, not realizing what change is happening. So the change is that these are the only few stocks, because they're not sectors, where we are not relying on end growth of consumer or end growth of insurance or end growth of logistics. But the shift in your, either if it's a retail thing, in your personal preference in buying from route one or the other, in buying online instead of from agent, or buying through quick commerce instead of going to your store or whatever. And these things can go on forever because these things are early in the game. The end with the businesses where you have to rely that India's growth will go from 6.5% to 7.5%. Those things will take time and you need many more things to fall in place. But the cynicism is, and that's why, I don't even own a lot if you see the portfolios, but just to irritate the system is so much fun via Twitter that I enjoy both the returns and the irritation I provide.
Oh gosh, and in these new age businesses, at least the Paytm bet, like you said, I mean, things seem to be improving, at least the numbers seem to be improving.
Everybody is improving. All of them
Paytm,
are
and even Eternal for that matter.
Old age. You see, we are young people, so we relate to these new businesses.
Absolutely.
With Paytm, Samir is also enjoying Prince Shot with, that was the other one he put out on Twitter.
Absolutely. But okay, to sum it up, Samir, before we let you go, so what you're saying is expect 5-6% return for the rest of this year, which is 1% return per month, which is too less by Indian investors' expectations. We're used to bull markets.
Tell them sorry.
Tell them sorry. What about if the RBI comes in and obliges with another, 25, 50 basis points this year? Do you see the bulls charging again, or is it just 1% per month?
No, this year, okay, but not now. Because if they do, then my bank's earnings will fall a little bit more for now. Because as they cut, it makes it, you need another 3-6 months to get everything in place. By the way, I have one more quick suggestion that what India should do. I thought about it in the morning, that we have to follow the Mark Zuckerberg policy. So what is our strategy? His strategy is, I will hire these individual guys from different companies in AI and make my own company. I think India should target 10 US companies and target them in the sense, bring them to India, bring Tesla to India, bring Disney to India, bring Harvard University to India, give them 200 million, 500 million.
Tesla is already in India and Disney.
No, not that. For opening one BKC, that is not India. Tell them open, we give you 500 million, give Disney 500 million open. Basically make the American companies invest in India while the Americans...
bring them to India like that.
Okay. The Americans want Indians to invest in America or the world to invest. You call Harvard University and say, we give you 250 million. Open a campus. You call Universal Studio. You call New York Public Library. Give them 200 million. Come and open 6. I mean, do something big with only $4-5 billion, but focused on deliberately US.
You think they can stand up to Mr. Trump? Maybe that's a debate for another time. They'll get a call saying, "What are you doing, Mark?"
No, if they don't want,
like he called him Mr. Tim Cook.
Then you can call Oxford University. First, you try US. I mean, what I mean is, you have to change that discussion.
Yeah.
And it won't be a lot. Maybe $500 million on 10 companies, $5 billion. What's the big deal? And obviously, you won't give it outright. It'll be based on you spend 80%, we'll give you 20%. But basically, somehow make a list. Just like Zuckerberg made a list of employees who has to target. And he targeted them, and then some of them agreed. You also target X number of companies.
Think big. Yeah. Absolutely. Think big always.
And focus.
Okay. All right, Samir, good to have you on the show as always. And congratulations to you, Alok, Dinshaw, as well as the team on the outperformance with regard to the Flexi Cap Fund. And look forward to having a drink with all of you all towards the end of the year. Hopefully it ends on a high.
In the meantime, you can invest SIP.
For 1% per month. Got that.
Got that, Samir. Look forward to meeting you and chatting up with you. Thanks a lot for joining in.